to the Manuscript Podcast. It's your host, Johanse, Yo, Harrison, it's me. Yes, I know the three name thing, but I just want to make it easy for all of you to just yell yo when you're in the airport, and I'll turn around and you won't be talking to me. It is such an honor to be here with you again on the Manuscript Podcast. We took a little bit of a break, but we're back. You know, it was spring break, so we had to go do some spring things. You may have caught up with us on the our money date that we had live from Hawaii. Alicia and I we decided to take a little bit of break from the beach to have a money date and have it with all of you on Instagram. So for those that joined us, it was good to see you. For those that didn't make it, we're going to do those more often. That was the number one question after that. Can you guys do this more often? This is like my dose of financial energy. We got you. We'll keep doing the money date live so you can take some dedicated time to sit down and focus on your finances, because that is why we are here. That is why I am here. This is my purpose. This is what gives me joy, is helping you make better decisions with your money, helping you have a better idea of your money script, of the way you think about money, the way you interact with it, especially in today's times where there are so many different competing ideas for your money. There's so many different ways that money is coming in and out of your account. I mean, think about it. Venmo and Zelle and PayPal and Cash App and Apple Pay and Google Pay. And do we even have to talk about all the cryptos? I mean, the list goes on and on and on. There's so many iterations of money and ways that you can make it and ways that you can spend it. So I want to help make sure that all of you are getting the tools that you need to make those better money decisions. So today, I am so excited because we are going to talk to a young entrepreneur that has created a playground, if you will, or a sandbox where you can get some experience and some training on what it's like to be a holder of stocks and feel what it could have been like, or what it was like for a lot of our listeners. I know it was for me on a day like yesterday. So we are recording today. I usually don't timestamp these things like this, but we are recording today on May the 5th. I should know that. 6th. Just kidding. It's May 6th. See, that's how crazy May 5th was. I forgot it existed. It just felt like an extension of May 4th. So on May 4th, the Federal Reserve raised interest rates by 0.5 percentage point. And something weird happened. The market went up. I was like, oh, okay, I guess we're going to do that now. But I'm not saying that interest rates going up or down have anything to do with how the market's going to perform. The market's going to do its own thing, going to find its own things to be scared of and excited about. But the market went up. And then the next day, May 5th, we had one of the worst days we've seen since October of 2020. I think the Dow was down almost 1,000 points or somewhere in that range. At one point during the day, it was down, I don't know, like 1,200. I think we, on most of the major averages, finished down more than 4%, which is a pretty big swing. But at the same time, we're used to it, or at least you should be. If you're an investor, a long-term investor, you should be used to it. These things shouldn't scare you. They should look at you as, I am an opportunity. I'm an opportunity for you to stick to your plan. I'm an opportunity for you to look for ways where you can save more. But we're also going to talk a little bit today about what could be around the corner, and that is that R word. Yes, here we are on a podcast. We started this podcast in 2020, right before the pandemic hit. And what were we talking about? A recession. And here we are again 2 years later talking about a recession. It's not a recession yet, but who knows? It could be by the time you hear this. Matter of fact, tweet me. Let me know if you're listening to this. Did we make it into a recession? Are we there yet? We are on the verge of what could be a recession. We'll talk a little bit about that a little bit later. But right now, let's get to my guest. Myles, how are you? Thank you for taking some time to join us on the Money Script Podcast. Ladies and gentlemen, Myles Gage. I am so excited to hear from this young man. Let's get into it.
Yes, Johan, thanks for the introduction. Appreciate that. Happy to be here.
You are one of the co-founders of an app called Rapunzl. First, I want to know, how did you get the name Rapunzl for a stock app?
I really like the analogy of the sandbox. So I'm like, yes, Rapunzel's like a digital sandbox. The name Rapunzel comes from the fact that people view the world of Wall Street and the returns of Wall Street as something that's perched in an ivory tower that's inaccessible to most people. So we like to think that we're the ones that are rolling down that here to provide equitable access to the returns of Wall Street and to financial markets.
Man, that's beautiful.
The honest answer, in addition to that, we were watching a lot of Silicon Valley at the time, the show on HBO about the startup company, and their company was Pied Piper. And then there was another stock app broker company that I'm not going to name right now And I was like, well, we could be like Rapunzel. And then we kind of backed into the name, but it just fit so perfectly with what our mission is and what we're trying to do.
Oh, the name you did not want to mention? I mean,
Yes.
or you don't want to give them any shine on this space. I get it. I mean, I'm not saying that we should, but I just said something that rhymes with it. But it's an interesting platform. Because I'm gonna tell you flat out, I've had many clients that have been leaving that platform in droves.
Mhm.
Okay, in droves, and for what I think all the right reasons. Talk to us a little bit about this sandbox. What can we do in the sandbox?
Absolutely. So how it works is basically we give our users 10,000 fictional dollars that they can use to buy and sell stocks of publicly traded companies utilizing real-time market data that's provided to us by the NASDAQ. So essentially users can see what their returns or losses are on investments without actually risking their own money. On top of that, we allow our users to enter their fictional or simulated stock portfolios into competitions for scholarship prizes, primarily at the high school level, and then for cash prizes if you're over the age of 18. So it's kind of like it's a tool to learn about investing and also an option or an opportunity to earn some money while doing so. That's kind of like the premise of it. We kind of got started off in 2018 by hosting a high school investment competition. And we figured a way to get banks to sponsor the scholarship prizes. So we have a nonprofit partner and they're able to secure donations from banks. So they basically pay scholarships out to the students to participate in the competition. And that model kind of allowed us to do some other different things. And here we are. But yeah, I'm happy to kind of go into more detail about some of that stuff too.
That was beautiful detail. I love just where this all came from and how you saw opportunity to not only educate people, but also reward people with real money for something that costs a lot of money. School, education. I mean, there's that's also been the talk of the town lately. In case you haven't heard, and there's been quite a few people found that haven't heard, federal student loans were paused again. So we are in May, and the last time they said it was the last time, but maybe this is the last time. I don't know. But we are in May, and it's been paused again until August. And there is more talk now that maybe there's going to be a little forgiveness, maybe even a delay in some of the and more of the interest. We'll see. For those of you that are looking to go to college, a lot of high schoolers and youngsters that are listening to this podcast, if you are thinking about going to college in the next few years, or if you're in college right now, Miles just talked about an opportunity where you can actually get some scholarship money at the same time learn about investing. And I want all of our listeners, I want you to remember if you look across the vast diversity of America, it doesn't matter what ethnicity we're talking about here. We're just talking about just looking across America to see how do people get their wealth. Okay. And I'm not talking about the folks that inherited it. I'm just about how do people create wealth. It's three ways, people. Three. Either they were an entrepreneur and they created a business. Maybe they sold that business, or it was a business where they found themselves so they didn't have to work anymore. They did it in the stock market or they did it in real estate. Okay. And the stock market, sometimes they look at it like it's this very fearful thing. It's not that fearful. And there is a place at Rapunzel where you can start to learn how to engage in the stock market. So tell us, Miles, how I want to go back to the inception of this and how it grew into what it is today. But I want to know just for the people, if you have a Rapunzel account, what can you do? Walk us through a little bit how the app works.
Right. So once you open your account, and depending on if you sign up using like your high school email address or your regular email address, you may see certain competitions on the platform. But basically, once you create an account, you'll see that you have $10,000 in a portfolio. And what you can then do on the app is if you click the magnifying glass in the top right hand corner. It'll take you to the discovery screen where you can then find companies by industry, or you can search specific companies by either typing their full name or their ticker symbols in. And there, your company profile screen gives you stock price and charts of their price over certain durations of various durations of time or periods of time. We also have like market news on the company and then some high level earnings metrics. So you can get somewhat of a snapshot of a company's financial health, then you have the ability to trade the stock, and there's a trade button. And so you can either buy the company or you can sell short. It's really cool, actually.
You can short on it?
You can short also.
Okay. I don't know. That's risky bit. I mean, if that's something you want to do, but I mean, that's the way people make money. It is. It
Right,
is.
absolutely. But like, I definitely are not just encouraging that right out the gate. It's a really robust platform in the sense that we have like the most up to date data, like streamed directly from NASDAQ. So it's more up to date than like Google Finance.
Oh, so not a Google or Yahoo Finance. You're getting straight from.
Right.
Oh, okay. Now, does that mean you can only get NASDAQ companies, or can you also get everyone on the NYSE? And
We get everyone else too.
okay.
So the thing is about what the genesis or why we wanted to create Rapunzel is like my partner and I, Brian, we grew up playing other simulators or using other simulators in classes in high school and whatnot or in college. And the interfaces of them were just terrible or the data was delayed.
Hey now, the Yahoo, was it Yahoo that had simulator or Google?
They did, I'm pretty sure.
I enjoyed it. That's where I first learned to play with stocks. Was on it wasn't. It was very. I mean, if you didn't have a basic understanding of Excel, it became a little difficult to use.
Mm-hmm.
And I would see a lot of friends or even clients over the years that got a little frustrated with it because, again, you had to have a little bit of Excel knowledge.
Right.
But it sounds like you've created an app where it's just as easy to do it on the app as it would be on the apps of some of those discount brokers out there.
Right, totally. And I mean, again, that was like all we knew. So that was our interaction. That was our introduction. That was our experience. But it was just in 2016 when we saw the increase in other platforms, like specifically Robinhood, and a lot of our friends like flocking towards that platform because it was accessible via your smartphone. So investing suddenly became a little bit more accessible. So we saw several of our friends starting to invest but don't have a baseline understanding of the fundamentals. So they're buying companies when they're green and then selling them when they're red. So they're selling them at a price lower than what they purchased them at, losing money.
So yeah, that's the opposite, right? So I think we're supposed to buy low and sell high.
Precisely. But the thing is, the nerves and the fear come into play. So you buy a stock and then you see the price decline or you see the price go down, not understanding the idea of market movement and price movement throughout the day. So some people can't stomach seeing like, oh, I spent $100 on this company, it's $90. I need to pull this out. So that initial comfort level isn't there. So then if you lose money investing, that ultimately leaves a sour taste in your mouth. So there are all these people that are having a bad first introduction to the stock market that could ultimately deter them from not investing overall. And especially as seasoned investors know, investing is not about timing the market, it's about time in the market. It's a long-term thing. And if you look at an S&P 500, over time, it's generated returns of 10% on average year over year, even through market declines. So that idea of compound interest versus putting your money in a savings account or something safer, it's just kind of like you should be over here. It's just like you need to have an understanding of how it works. And really what Rapunzl ultimately hopes to make people do is understand it. Often they're probably not going to be a good stock picker. And they're going to see like, oh, I should have bought an index fund, I should have bought an ETF, but still understand that this is something that they should be doing, investing.
Indeed. And so, and Myles, just so I can make sure we get my disclosures at the bottom of this, the S&P 500, he is generally, Myles, I'll give you are correct. The S&P 500, there is a generalization that if you look back, it's earned more than 10%. I'm actually looking at the chart right now. And depending on the time frame you're looking, you may even find periods where it's more than 10%. But to make sure we all understand it, because we all experience the stock market a little bit differently. And it is possible to find a 10-year period for the S&P 500 that's not 10%.
Mm-hmm.
It's also possible to find a 10-year period which is greater than 10%, but he said it best, and that's what, don't focus on the 10%, okay? Focus on the words that he said of it's not timing the market, It's the time you spend in the market, time in the market. It is for long term investing. If you are someone that thinks you can outsmart everybody else and be the best stock picker and be the best timing and time the market the better than anyone else, you can get lucky because there are people that win the lottery every day. And if you buy enough lottery tickets, there's a pretty good chance that you could win something. I'm not going to say you were going to be a millionaire and win 100 million in the lottery, but is it possible that you could win 10,000, 50,000, 30,000 if you keep playing the lottery enough? Yes, that is putting time in and money. The market, the longer that you are a participant of it, the more you are less reactive and emotional about the decisions you make, the better you are at understanding when you are being fearful. Also, when you're being greedy, because greed can also slaughter people in the market as well. The better outcomes I've found that you can have in your investing journey. I've got a portfolio right now that's down about 50% from its high. Okay. Imagine that in a matter of like, I don't know, 4 months, 3, 4 months. Imagine you have a portfolio, it's $100,000 on Christmas Day, and then on Cinco de Mayo, it's worth 50. Okay. Am I concerned? Not in the least bit. And there's a lot of individual companies in there. May I have a little bit of individual concern for a couple of those companies? Like, yeah, they need to get their act together. But if I still believe in the company long term, I'm like, hey, this is a great time to buy some for less. And we can talk about company after company. I don't want to do it. I don't want to fill my disclosures, the show notes with a bunch of disclosures. But there are a lot of companies right now and a lot of indexes, whether it be the S&P 500, the Russell 2000, the technology index, whatever it is. There's a lot of them that are down right now 20, 30, 40% from their highs. This could be one of the greatest opportunities that we've seen in a long time. So if you want to learn more about this, you want to try it out. Maybe you've been thinking about scheduling some time with me, but you're like, I'm not ready. Myles has a solution for you. It's the Rapunzl app. You can get on there. They're going to give you $10,000. Matter of fact, students, if you're out there, for all my students across the country, this is a great opportunity for you to try it out. Get the $10,000 and see what happens. See what you're able to do. And maybe pick up some books, do some reading. He said there's a lot of tools in there as well that can help you learn more about how you can be a prudent investor long term and win at this game. Because I know a lot of winners. I do. I know a lot of winners. I also know some losers too, but I know a lot of people who have made a lot of money in the stock market over time, and very few of them got lucky. I got a few that got lucky. I got a few clients who are like, oh, I bought Tesla 10 years ago. Good for you. Okay. Or you name the companies. I'm not supposed to name companies, but whatever it is, they bought that stock and it went up 10, 15, 20, 30 fold. They also have companies that went out of business. Okay. And we all know companies that have gone out of business. So, anyways, enough about that. I'm getting on this soapbox here just because there's so much to talk about with how the market is right now. This is a great opportunity to get in and learn on how you can do better with your money and with your finances. So, Myles, I suppose we can find Rapunzl on all of the applications.
Google Play and the iOS App Store, Rapunzl, Rapunzl. So it's like the fairy tale, except there's no E.
The fairy tale without the E. I'm sure if you put the E on there, it might even lead to you guys as well. Is there a cost for the app?
No, it's free.
See, look, this whole time we've been building this up about this amazing app that's out there that gets you to try out things on the stock market, become eligible for scholarships and compete. And we didn't even mention till 20 minutes in that it's free. Okay. What is your excuse? This is a great opportunity. I have no excuse now. I mean, I was thinking, I do this every day with real money. I might even give it to my 4-year-old daughter. Say, here, go pick some stocks. Let her use her $10,000. See who knows? I might have found a new financial planner. Miles, I want to take a step back because your story is unique on how you came to build this app and your experience with the stock market. We ask all of our guests on the show if they would share with the listeners and just really to help them to get in touch with themselves and their own money script. But what is your first memory of money?
I would just say like the most distinct was just when I was a kid, my mom made us split our money up 3 ways. She had to think called the 3 jar system. So that was something that really stuck with me. So every time we got money, 10% was your charity jar, 40% was your savings jar, 50% was your spending and living jar. And that 40% would ultimately become investing. But I just remember that distinctly because it just forced me to start saving and get into the habit of saving and also giving and helping and whatever that's tithing at church or using it to help someone else out. But that was like the initial exposure, I would say, to money.
Beautiful, beautiful. And look at you now. Okay. See? So thanks, mom. That is an incredible lesson. So for parents that are out there, that is a great tool to use with young children. We use it with our daughter. She's 4 and she has the jars, spending, saving, and charity. And she understands as she puts money into those jars that, when it's time for her when she wants to spend some money, you know what jar to go. She also knows that when that jar is empty, she just can put on a little sad face and go beg a grandparent or something like that. And that works out too. But helping children to understand how to segregate their capital. And I love that your mother put such a heavy emphasis on the savings one. 40%, that's big. I got to talk to my wife. We got to step our game up.
Yeah. So like, yeah, it was very aggressive saving early, got into that early.
And now you're an investor. Look at that.
Yeah, no, like for sure. And then in 6th grade, I joined a teen investment club, and that's when I started investing in the stock market. And I think I started off with $200.
Oh, what were your first picks? Do you remember?
Pretty sure the first company I bought was Nike.
Ah, yes, a very popular one for the young ones.
Nike and then Apple.
Nike is very popular. That was one that when I was using the Yahoo Google, that was one of the first stocks that I pretended to purchase as well. Was Nike. When I teach for the college courses, one of the examples that I use as I'm telling a story about consumerism is the price of Nike stock in 1985 and the
Mm-hmm.
price of the Jordan 1s in
Mm-hmm.
1985.
Mm-hmm.
And if you purchase the Jordan 1s and never wore them, there's an article out there about how much they auctioned for that weren't worn a couple years ago versus if you purchase the same amount of stock in 1985 in Nike, what that would be worth. Most people don't not wear their Nikes. So there's very few people that purchase a pair of Jordan. Oh, I'm going to never wear these and see what they're going to be worth because Jordan's going to be awesome. I wear my Jordan, so they're not worth anything.
The reason that they're a dead stock is because they were accidentally stored and then someone found them and then realized.
Exactly. It wasn't intentional. Buying the stock would have been intentional.
Right. Very much so. What was Nike's share price in 1985?
Ladies and gentlemen, we'll put this in the show notes for you with all the disclosures so you can look it up yourself. So if you look back at the price of Nike, and this is according to public information, I looked this up on Google Finance and went back to see the price of Nike in 1985. Now, I did have to adjust for a few splits. There's quite a few splits that Nike had over time, but split adjusted, the price of Nike in 1985 was $10.75 a share.
Mm-hmm.
So for the price of the 1995 Air Jordan, which were for sale at Macy's at $65, sometime that year, I'm basing on the average price that year, you could have purchased 6 shares.
Okay.
Split adjusted as of, and this is as of, I haven't updated this since January. So as of January 1st of 2022, those 6 shares would be 384 shares. And I'm not going to say the price of Nike today. Y'all can look that up on your own. But your 6 shares would now be 384 shares. And go check the price of Nike today. Okay. Let's just say that's a lot of shoes.
Yeah.
Now, that doesn't even take into account, Myles, the dividends you would have got paid all along that time.
It's true.
Okay.
This is true.
Hypothetically speaking.
And if you reinvested those dividends,
I didn't even take that into account. No, I didn't. No. It's not even. No, because it just because here's. I'm just gonna be real with you, Myles. The numbers just get kind of stupid.
They do.
That's the best way to describe them. And Myles, I have come across in my career clients that have owned stocks for 30 and 40 years. of companies that are still in business, and you look at them in just awe. You're like, what? You started with how much? Just like I've come across clients who purchased a property in Los Angeles in 1945. It's like, you paid what for what? Not even Los Angeles, even Northern California. I mean, I could just look at something like my parents' house in Charlotte, North Carolina versus the value today. It's like, you paid what for what?
Yeah.
Okay. But that's, again, that's how people create wealth. Okay. And I don't know what role that, some of the newer forms of wealth are going to have long term, but time will tell. But I do know it has been working for a long time.
I mean, since its inception,
Okay.
it's been a pathway.
It has been a pathway. And I know past performance is no indication of future results.
Yeah, exactly.
I'm not going to say that at all. I am going to say that I don't know anything else. I mean, until you can show me a better idea with a proven track record like this, I'm going to stick to what I know. So,
right. And nonetheless, we should give the people the tools that allow them to create a more informed decision. Like, what do you think?
Amen.
See what's going on.
Amen.
You also do these other things because it's like now we're adding crypto to the app too. So it's like, well, we understand this whole, decentralized, DeFi area and all of these things. So also here's a platform to learn about that as well. So, yeah.
There you go. Well, Myles, thank you so much for joining us on the Money Script podcast. Before we go, if people want to keep up with you guys and social media, can we find you there?
Yeah, Rapunzl Investments on Instagram, and I think it's Rapunzl_investments on Twitter as well. Pretty much the same thing across the board. So yeah, definitely check us out, download the app, and tell all your friends about it.
Do that. And students, hey, if you guys want to hop into a competition, you know what, Myles, let's have a conversation offline. I'm willing to contribute to the scholarship fund. I think that's a great idea. So we should have a conversation about that. I'd love to do that because I do have some students. I teach in high schools and colleges all over the U.S.
Okay. Yeah, absolutely.
So yeah, we'll talk about that offline. But everyone, thank you again for spending some time with us on the Money Script podcast. Do yourself a favor. Go check in on your investment portfolio, or if you know that you don't need to look at it, don't look at it. But maybe just check in. Maybe you need a little rebalance. Maybe you needs a little love. Add a little bit more money to it. Or if you're one of those people that all you're doing is your 401k and mutual funds and you want to learn more about investing in stocks, there's a free, F-R-E-E way for you to have a little fun. So Myles, again, thank you for being a student of finance and a professor. We appreciate you. And we look forward to seeing more of you on the Money Script in the future.
Yes, thanks for having me.
Thanks for joining us on the Money Script podcast. Be sure to check out our other episodes, subscribe, follow, and give us 5 stars. Continue to send your financial questions on Twitter or Instagram at the Money Script. Go to moneyscriptwealth.com and schedule your complimentary consultation to discuss your specific goals and concerns. Financial advisory and investment management services are offered by Money Script Wealth Management PLLC, a registered investment advisory firm registered in the state of Texas and California and other states where exempt. The Money Script LLC and the Money Script Wealth Management PLLC and guests of the episode may have interest in the investments mentioned today. The opinions and views are expressed here are for informational purposes only. This material is educational in nature and should not be deemed as a solicitation for any specific product or service. All investments involve risk and a significant loss of principal. The Money Script nor Money Script Wealth Management offer tax or legal advice. Please consult your tax advisor or attorney for specific advice about your situation. Until next time.